Good evening, everybody. Once again, we get the great pleasure of having Hubert with us tonight. Always enjoy having Hubert here because he probably is, I guess, the purveyor of excellent investment training information to the point that every time Hubert talks to our group, I get more positive feedback from everybody than anybody else out there. So his information is very viable, very good to grasp onto. So with Hubert, I'll take any more of your time. We're anxious again to see what information you got for us tonight.
Thank you, Stephen. Thank you very much. All right, let me do a quick audio test here because sometimes Omnovi and GoToWebinar and stuff does not get along with me, and I don't get along with it sometimes. So if you can hear me, give me a yes in the chat box. All right, getting some sounds good. All right, cool. So I've got a special guest with me tonight. We're going to do a little tandem action here on this presentation because it's a new service and it's a new presentation, but you're really going to like it. There's some really cool stuff. So the title of the webinar is The Best Traders You've Never Heard of. And all right, so let's go ahead and let's get started. My name is Hubert Centers, and tonight I've got a really special guest here with me. He's an old friend of mine and possibly the most thorough stock researcher I've ever met. Now, before we get started here, what we're going to do is we're going to do this presentation. If you guys ask questions, or if you do ask them, we're going to hold them off until the end, and then we're going to answer every single question at the end. Because what I'll do, because I know I've done it before, I'll go down a rabbit hole, and this webinar will be 2.5 hours. And I know you don't want that, and I don't want that to happen either. So, but we will answer every single question that you have. Most of them will be answered in the presentation, but if you've got some after, we will address those. So, like I said, he's an old friend of mine and possibly the most thorough stock researcher that I've ever met. His name is Ross Givens, and for the first time ever, he's going to reveal the results of an exclusive breakthrough investigation into perhaps the most successful group of traders that you've never heard of before. Something that I thought was actually impossible, traders with perfect track records. And it sounds too good to be true, I know, but he's been showing me his research, and it's pretty mind-blowing, so I'm excited for you guys to see it too. So Ross, take it away.
All right, thanks, Hubert, and thanks everyone for letting us, having us on. What I want to share with you guys tonight are the secrets of a group I've been calling the best traders you've never heard of. They don't work at Goldman or Merrill or Credit Suisse. In fact, most of them live hundreds of miles from Wall Street, but they have a unique advantage over everyone else. They're insiders. Now, when I say insiders, I'm talking about CEOs, CFOs, executives, board members, folks that have inside non-public information about their business. In fact, I found an elite group of 272 such insiders that weren't just right some of the time, they weren't right most of the time. They were right every single time they traded their own company stock. They were always profitable. And as you'll see, this is anything but luck. You're going to discover how this group of corporate insiders gets it right and why their stock trades have always gone up. Now, to find how they do it, a research team and I examined more than 7.8 million trades going back to 2003. I believe it's probably the most exhaustive study of insider transactions ever performed. And in mining this trading database, we looked at about $600 million worth of pure insider profits. What we found was when these insiders invested, their stock always jumped significantly and fast. In fact, out of 936 trades, they won 936 times. No losses. Their stock always went up without exception. And today you're going to see how you can follow these elite insiders and achieve similar results. Returns are so consistent, so effective, that following them can make investors very wealthy. In fact, I'm guaranteeing my new members the chance at $100,000 in profits in the next 12 months.
Which is a crazy guarantee.
Hubert thinks it's crazy. I'm going to prove to you it's not. I'm going to show you the biggest investing achievement of my career, a discovery that could have handed you gains like 198% on iRobot, 329% on Kira Therapeutics, and a 443% gain on Ultra Holdings. It's a very small sampling of what you could have made by piggybacking these insider trades. We're going to show you a lot more examples tonight. So, Hubert, it's great to be here. I'm excited to share and finally reveal these insider secrets.
Now, Ross, if what you've discovered is real, this could potentially be the holy grail of investing. Following traders who never lose. When I hear stuff like this, my first instinct is to call bullshit in on the claim, right, and run the other way. So please tell us how this is all possible.
Well, you have to remember, they're only trading one stock, and that's their own company. Look, as investors, we've been told we can't beat the market, that you should settle for simply winning more than you lose, targeting 10, maybe 15% a year as a goal. But the truth is that when you follow the insiders, there are always exceptional stocks going up 5, even 10 times higher if you know where to look. And that's what we're talking about here. It doesn't matter what direction the stock market is headed, up, down, sideways. There are always stocks going up, and these insiders are always profiting from it. What I'm going to share with everyone tonight is who these people are, how they're able to time their trades so well, how you can follow their trades, and why I believe this is hands down the easiest and most profitable way to trade stocks.
All right, Ross, I'm looking over some of your research, and I've got actually, I'm going to count the pages here because I got them. You guys can probably hear me fumbling around with them because I've got all the research here. It is basically a ream of paper. It is 86 pages of research, and I'm holding here a list of 272 traders, all insiders, who consistently bought massive amounts of their own company stock with their own money, and they never lost on any trade. And it looks like there were at least 30 of them that saw multiple triple-digit gains. I mean, this one guy had a 926% return. Is that right, Ross? Is that a stock or is that an option?
No, yeah, that's a stock gain. And look, some of the gains you're going to see, they're so big and so well timed, you'd think they'd be flagged for insider trading. But thanks to a little-known SEC rule, which I'll tell you about in just a minute, these guys are basically immune from prosecution.
All right, well, tell everybody how this works. Show us exactly how these insiders won on every single trade. Let's answer a couple of questions first. Okay. How many trades do you find each year, and how many of them turn into large winners?
Okay, so on the number of trades, I go through a little over 100,000 trades a year. I mean, it's a lot of data, but it gets culled down pretty quick. So the first thing I throw out are option exercises, right? A lot of these C-level executives, they receive stock options as part of their compensation package.
Sure.
So what they do is, before these options expire, they convert them to stock. So I ignore these trades since they're not buying with their own money. They're just exercising the option and cashing out, right? Next are those that are part of a regular buying schedule. So let's say you've got a CFO who buys 10,000 shares on April 1st of every year. For our purposes, this means nothing. It's not significant. He's not acting on new information. He's not trying to exploit the profit potential. He's just following his pattern, right? Yeah, so I throw those out too. The next thing I throw out are trades that are too small, right? So if you've got this fat cat CEO and he buys, $4,000 worth of his stock, that's nothing significant. It's a drop in the bucket to a guy at that level of earning. On the other hand, if you've got a $65,000 a year director betting $200,000 on the stock, that's a much more high conviction trade, right? Something I'm going to pay attention to. So, and then once you filter out institutional buyers, trust activity, insiders with poor track records, you're left with a much more actionable set of trades. Now, as far as how many big winners, I've got the data for the group of 272 insiders who never lost. Their buys gained 100% or more within the year, 26 times in 2014, 24 times in 2015, and a record 39 times last year. And at first it seems impossible, but if you think about it, they're only buying when it's a no-brainer opportunity. Better than expected earnings figures, a new merger that hasn't been reported yet, a pending FDA approval for a new drug. These folks are betting their own money, so they only do it when it's close to a sure thing.
Obviously, you're very confident in these trades because you're making this crazy guarantee where all new subscribers get a chance to earn $100,000 over the next 12 months. And at the end of your presentation, you're going to tell us more about the research on your top 3 picks that you're giving new members, correct?
That's right. Yeah, each of the 3 stocks I'm going to be recommending to new members today have seen huge insider buying in recent weeks, and I think all of them could easily see triple-digit gains.
Now, Ross, I know you used to work with high net worth individuals in the past, back in the day. You've also managed some money. You were one of the vice presidents of JP Morgan, but you were telling me earlier that this new service is designed specifically for regular folks, even if they only have a few $1,000s to start with.
That's exactly right. And look, I've worked with a lot of high net worth people in my career, and what I've learned is if you've got several $1,000,000, those people tend to be fairly risk averse, right? They have that luxury. They can earn 6, 7, even 8% a year, and that's plenty for them. But if you're staring down the barrel of retirement and you've only got 5, 10, 50, I mean, even $100,000 saved, you've got to be more aggressive. You need some big winners, stocks that can climb several 100%. And this is the best way I know to find them. Before we get into the 3 stocks on my list and the $100,000 guarantee, I want to show everyone a classic example of just how this strategy works. So let's look at one. Our first insider is a guy named Erlen Kay. Now, Erlen is a director at Five Star Bank, and for most of his career, he only owned a few thousand shares of the company stock. But then not long ago, he went all in with his own money, picking up 15,000 shares in just 1 week. So the 3 circles you see in the bottom left of this chart, each of those is a 5,000 share buy 1 day after the other. 11 weeks later, the stock was up 230%.
All right, hold on just a second. It looks like the stock went from basically a nosedive from $8 all the way down to $4. I mean, maybe it's just me, but I prefer to buy things on an upswing. Doesn't it worry you if the stock's falling so much?
Ordinarily it would, yes. And if I weren't following insiders, there's no way I would have bought. But that's one of the huge advantages of this type of trading. Think about it. In theory, if you like a stock at $8, you should love it at $4. I mean, it's half off. But you have to know that the stock is still worth $8 or more. Otherwise, you end up being a sucker who bought the next Enron or BlackBerry because it, quote, looked cheap. Information is the most valuable commodity on Wall Street. If you know the story before everyone else, you've got an enormous advantage in the market. And that's exactly what these insiders have. Hubert, let me ask you a question. What do you know about the financial health of Five Star Bank?
I don't know a damn thing about them.
Yeah, look, exactly, and me neither. Even analysts, they're trying to make an educated guess, but they don't really know anything either. But guess who does? Our boy Erlen Kay, who sits on the board of directors, plays golf with the CEO, right? Our insider. He knew his bank was fundamentally sound, and soon after he bought the stock, his company announced a huge quarterly profit, much better than the street was expecting, and the stock shot up. Got in cheap, more than tripled his investment in just 11 weeks. Timed the trade perfectly. I've got the numbers here. He turned $69,200 into $228,750, $159,000 profit.
All right, so one of the main points here is rather than trying to predict when the stock is going to go up, you follow the insiders that have great track record, not just any insiders, and you just ride their coattails.
That's it. I'll show you another one. In June of last year, I spotted heavy insider buying in Enterprise Bancorp. Not only was the CEO buying shares, but also the chief financial officer, 7 vice presidents, 12 company directors, and the chairman of the board. In total, 22 different insiders bought the stock at the exact same time. So we got employees at this little unknown bank betting more than $2.3 million of their personal money that the stock would go higher. Now that's more stock that had been purchased by insiders in the previous 6 years combined. So this is a screaming buy.
So there's some pretty good buys in here. Here's 10,000 shares,
Yeah,
40,000, 10,000, a couple 4,000, 5,000. The guys I feel sorry for are the ones that picked up 363 shares, 466 shares.
277 down there. Some of these guys came in a little light. They're probably kicking themselves a bit, for playing it cautious. Look, let me show you. I'll show you what this looks like graphically. So this is the same stock chart I just showed you, but we have the insider trading activity overlaid. So the green bars are buys, and the red bars are sells. Now the first thing you'll notice are those scheduled buy programs I talked about. So if you look here, these first 4 green bars, There we go. So we got Jan 2014, Jan 2015, Jan 2016.
So those are not important. Those mean nothing because they're just scheduled buyback programs. Or
Exactly.
Just stock options.
Yeah,
right?
when I went through the numbers, you got 10 employees here.
Yeah.
They buy every year at this time, so it's not anything important.
Gotcha.
But then in June, we get this huge spike when 22 different insiders bought.
Okay.
So the last stock we looked at had just fallen. The one you mentioned had gone from 8 down to 4.
Yeah.
So the insiders were buying that because the stock was too cheap. But that wasn't the case with Enterprise. The stock was actually trading near its highs. And there's only one reason all of these insiders would buy with such conviction at this price. After they knew good news was coming. Sure enough, 30 days later on the quarterly earnings call, the CEO announced net income was 36% higher than expected. The stock launched. All told, these insiders were sitting on $1.9 million in profits just 6 months later. Classic insider buying.
All right, Ross, this is powerful stuff. I mean, if you weren't tracking these insiders, this stock would have never came across your radar. I don't know anyone that follows the small regional bank stocks.
Yeah.
But it makes perfect sense when you find 22 people who have insider information about the company starting to buy, you should probably pay attention. And here's the best analogy I can give you for that. So let's say Candlestick Forum was a publicly traded company. I'll guarantee you Stephen Bigelow and Becky and Jim would know whether Bigelow was profitable this month,
Right,
underwater, or if he's having a good quarter or a bad quarter, right?
No, it's a good analogy.
Yeah.
I mean, look, if candlestickforum.com was publicly traded and Steven's sitting back there watching the value go up and down,
He would know.
he immediately knows,
Right.
Oh, man, we got a lot of sales. That's actually pretty cheap, or that's kind of pricey.
Right.
Yeah, it's such a simple concept, and it's easy to see why it's the only way I trade stocks and why I'm comfortable guaranteeing all new members the chance to make $100,000 in the next 12 months.
It seems pretty obvious that these insiders have a huge advantage when they trade.
Yeah, look, that's what we aim to do in my insider report service. We're buying alongside the insiders, especially when we see huge cluster buying like this that we saw at Enterprise. And by doing this, you're giving yourself the same advantage they have. It's almost hard not to make money.
Okay, so I can see why so many people follow your work and your research. Didn't you get a call from one of the largest money managers in the country?
I did, yeah. To be honest, I didn't even know who the guy was. I gave a presentation very similar to this one a couple years ago. This guy emails me after and asked if his secretary can set up a phone call between us. So he's immediately above my pay grade, right? Nothing I'm used to. Figured maybe I should figure out who this fat cat is.
Right.
I Googled him, came across a Forbes article ranking the top 100 wealth managers in America. He was number 2, manages $21 billion.
So I assume you kind of cleared out a little bit of time to take his call?
Coincidentally, I had a few minutes free. I was able to make time for him. But no, I mean, really nice guy, actually. But look, I didn't design my service to help the uber wealthy. I built it for everyday investors, people who really need it. So, if you're saying to yourself, I've only got $10 or $20 or $30,000, and look, I don't have 30-plus years to grow and compound this money the old-fashioned way, this is it. This is your chance to actually become wealthy.
Now, you and I were talking about this earlier, but I'm sure everyone else would want to hear it. You said that we actually have an advantage over these insiders.
That's right. Insiders have to comply with something known as the short swing rule. They're not allowed to sell their stock for 6 months after they buy it. Otherwise, the government forces them to forfeit their profits. So this gives us 2 advantages. Number 1, insiders are thinking long term. Since they can't sell for 6 months, they only buy when they expect their stock to go up and stay up. So these tend to be sustained moves. And number 2, we can sell whenever we want. So if we get a quick move of a couple 100%, we can sell and book our profits quickly.
So they buy, you buy, the stock goes up, then they have to wait a full 6 months to sell, but we can take our profits whenever we want to.
Exactly. And look, it's no secret that tracking insiders is highly profitable. In just a minute, I'll show you all the research that proves it. But think about it. It's simple common sense. Nobody knows the value of a company better than the people running it. And so if they're buying, you probably should too. The greatest mutual fund manager of all time, Peter Lynch, he used to say, invest in what you know. Nobody does that better than these top insiders. I want you all to imagine that you sit on the board of directors of 6 companies. You have intimate knowledge of each. So which one are you going to invest in at market prices with your own money? Where are you going to put your hard-earned retirement funds? Obviously, in stocks that you know firsthand are trading for much less than they're worth. And that's happening because as a board member, you know a hell of a lot more about these companies than anyone on the outside. So these are the people that you as an investor want to be tracking. Everything I've done in my career has been kind of building this and the three opportunities I'm going to tell you guys about later tonight.
Ross, I know you've been tracking the insiders for years, but get into the ones that you're recommending to your new members tonight. Can you give us some more examples?
Sure. So just following insider trades would have tipped you off to a 392% gain on Chronos worldwide, 473% on Lending Tree, 644% on Applied Optoelectronics, 687% on Heska, 904% from Chemet Corp, and Hubert an incredible 1,249% on CRH Medical, all stock gains, all from just following insiders.
All right, I got two important questions for you.
Yep.
Number one, and this is the most important one, I think. How in the hell is this legal?
Okay.
All right. Because when I think insiders, I think Martha Stewart, hedge fund managers, people being marched into the FBI or the SEC with gold
$5,000 suit and
handcuffs. Yeah. Right. And number two, how do you track all this stuff?
All right, so both good questions. Let's start with the legality. That's a very common one I get. So here's the thing. Insider trading, yes, it is technically illegal. But 9 times out of 10, the arrests you see are hedge fund managers or traders, not company insiders. Insiders are protected by an SEC loophole.
Of course they are.
Of course, right? Loophole is called the 10b-5-1 rule. And essentially what it says is this. As long as the insider has a written plan, it's the important part, written plan, for when he will buy and sell his company stock, he is immune from insider trading violations. Well, Hubert, the rule is so vague it is almost laughable because this plan for when the insider intends to buy and sell can be anything, even his own proprietary formula. I mean, these guys can trade based on phases of the moon, and the SEC gives them a thumbs up. The SEC doesn't even require executives to disclose the plan's existence, its provisions, or any changes made to it. This 10b-5-1 plan, instead of being filed with the SEC, is simply set up with a brokerage firm. It can be changed, modified, or canceled at any time for any reason. So it's basically a free-for-all. The only hard rule they must follow is reporting their trades. And they do this on what's known as a Form 4. Insiders have to disclose how many shares they bought, at what price, and when. And these are the filings I track. I can scan for new trades at any time and see exactly what insiders are buying.
All right, so it is legal,
It's legal,
which is crazy to me.
All right.
But you can see what they're doing. You can follow along, and we can actually use all of that information to our advantage. Now, you've been doing this for a long time, but give us a little history of how this project all started.
Well, I think all of us in this room have, at some point, beat our head against the desk trying to figure out what works in the market.
I did that yesterday.
I think I saw you in here yesterday trading some bonds.
Market got me yesterday.
Doing the table pound.
But I got it today. So.
Yeah, it happens, right?
Yeah.
So I was in one of those spaces, and I got this idea one day, decided to try to figure out, instead of looking at what makes stocks move, I wanted to know who it was that knew they were about to move. So who were the people that seemed to have impeccable timing and always bought the right stocks at the right time? So I broke it down by sectors. I wanted to know who was buying bank stocks in 2009, real estate in 2010, solar stocks in 2013, energy at the 2015 lows, all these opportunistic buys. And you know what I found? It wasn't Buffett, Soros, or Einhorn, and all the big hedge fund guys. It was the CEOs and the CFOs and board members of the very companies being bought. And did you guys see the horror movie? It's from the 70s called When a Stranger Calls. Remember that movie?
Yeah, I remember that.
They did a remake?
They did a remake because my daughters watched it not long ago. It's one where the killer is in the house.
That's it.
The calls are coming from inside the house. Get out of the house, lady, get out.
Right. So if anyone didn't see it, the basic premise is a babysitter's at home, getting harassing phone calls all night. The climax is when the police call and say the calls are coming from inside the house. And that's what this always reminds me of. The best stock calls were coming from inside the house, and it has been that way for as far back as I've been able to research.
All right, so you start digging and you find people that work at these companies, profits buying their own stock. Now you know what to look for. And you've been following these insiders for years, right?
That's right.
All right. So, but you didn't stop there. So tell us about your most recent research.
Yeah, well, I've been tracking these trades for years, had a lot of success with it, but I wanted to go deeper. This is what Hubert calls OCD that I consider.
You are OCD.
I think it's thorough.
Well, my wife also thinks I'm lazy. I tell her I'm efficient.
That's smart. I like that. Well, anyway, my project, what I did, I got together with an East Coast financial research team. They had the resources to, accomplish my somewhat ambitious project because their team included several research analysts, sell-side traders, former hedge fund traders, an ex-investment banker, and in total we reviewed, as I mentioned, 7.8 million insider trades. So we had to leverage the new technology to answer, that question: who are these most successful insiders? So it took us a couple months. We're talking about terabytes of data going back to 2003. We took over a dedicated Bloomberg terminal, and just the data for that one cost like $25,000 a year.
Yeah, they're what, $2,400 or $2,500 a month. Neat little machines, though.
I do a lot.
Yeah,
you want to pay for it?
Yep.
It was a Bloomberg. We used Google's cloud platform for data storage, a proprietary machine learning engine for data accuracy. We even brought in a programming expert on DNA analysis to write more than 10,000 lines of code to mine the data. And in the end, we discovered this elite group of 272 top insiders. These are the insider super traders who have never lost on a single trade. The results and track records were cross-referenced with major financial institutions across the globe. And I can say without question that these are the best traders you've never heard of.
So you're saying you've done your research and your homework. Is that what you're saying?
I looked around.
You looked around? All right. Seriously, this is pretty amazing. This is the largest trading study I've ever heard of. And like I said, I've got over 86 pages of documentation.
Well, I mean, look, it may be a little overboard. That was kind of the goal, though. I needed to know beyond any doubt that this was the path to beating the stock market. And now I can confidently say that it is. Sort of as a bonus, I also found those 272 absolute best performing insiders, so I know exactly who best to follow.
Well, show us what you got here. Walk us through a few examples of how you and I and everyone else watching this webinar could have followed these insiders and made some good trades on.
Yeah, let's do it. We'll start with EL Financial. Now, this is an insurance holding company operating mostly in Canada. You've probably never heard of it. I hadn't either until it caught my attention last year when I noticed huge blocks of insider transactions starting in March. 4 separate buys occurred in a 5-day period, which is almost unheard of. And for the next several months, these company insiders just kept buying. In total, they picked up over $70 million worth of stock. As soon as the buying was done, the company released its annual earnings report. Big shocker, assets under management had grown to a record $16.1 billion, and as you can see, the stock climbed 100 points almost overnight.
Now, Ross, I'm not a really big options guy, but I can just imagine if you could have picked up an option just on a straight-up call, a $5 or $10 call option, and then a week later it's worth $100. That's pretty crazy.
Yeah, and Hubert, look, there are hundreds of examples just like this. One of last year's best performing stocks on any of the exchanges was Clayton Williams Energy. And if you've been watching the insiders, you could have made a small fortune. I noticed cluster buying in a stock last April. President, 2 directors, and the vice president of gas gathering all bought at the same time. They got in for around $9 a share. A month later, the stock had doubled. 2 months later, it had tripled. By the end of the year, they were sitting on a 1,436% gain. I mean, think about that. You could have invested just $10,000 in this stock last April and had over 150 grand by Christmas. 15 times your money in just under 9 months. It's unreal.
If this was anyone else telling me this information, I would call total bullshit on it. But I know how OCD you are about your research because you go overboard on that stuff. And I'm holding over, like I said, 86, 87 pages of proof that it actually works. But I keep asking myself this one question. How often does this actually happen?
Well, like I said earlier, you had just out of the 272 traders and following, you had 39 chances to make 100% or more last year. And that's the beauty of this strategy. The insiders I track are buying because they know with every fiber of their being that the company is trading at a huge discount to its real value. Look, they only buy for one of two reasons. One, the stock is beaten down and it's selling for a lot less than it's worth. So a classic value buy situation. Or two, the company is doing extremely well, but the market doesn't know it yet. Either way, when they're buying, it's the best heads up you can get.
So it's kind of like you're tracking the world's best value investors. So if you're conservative, you should love this strategy.
And that's the thing, whether you're looking to hit it big on like an up-and-coming small cap, or you just want to add some blue chips to your portfolio at low prices, insiders will always alert you to the best time to buy. Now, when it comes to big, safe blue chips, ExxonMobil is a staple, right? Now, this is Exxon stock for the last 3.5 years. So let me ask you guys in the room here, if you had a time machine and could go back and buy this stock anywhere on the chart, where would it be? Where would you want to own this?
Where would you buy it? Answer in the chat room there. Where would you bought it with 2020 hindsight? Where would that be at?
That's the gift we all hope for, right? If I could just go back one time.
Yeah. I mean, clearly, if exactly. So I can tell you from. So show us where the.
I'm guessing you'd bet around here, right? Not that we could, but if you had the choice.
That's if I didn't know anything about trading. But there's no way in hell I would get that low.
Yeah, it's almost the bottom. But that's what we would have liked to buy, right? Let me show you where the insiders bought.
Dead low, right? Dead low.
Yeah.
My technicals, like the Ichimoku cloud, I bet you, because the price action's got a bottom, then it has to go back above the cloud. I bet if I overlay it, maybe here, I'd have to do an overlay on it, but I would definitely not get it at $67.
And that wouldn't have been a bad buy, right? If you get the low, you got lucky. Let's be honest, right?
Oh yeah.
But this is what they did. This is the only insider buying in this giant stock in 3.5 years, and it's right at the low. I mean, you could not have timed this thing any better.
I don't know how you could have traded it any better, but like I said, I've been trading for 25 years. I may have got the dead high of the day and the dead low of the day to the tick maybe 6 times, and it's all just pure luck.
Yeah.
Right? It's just being in the right place at the right time. But even with perfect timing, it's very hard to get more than, say, 20 to 30% on a large stock like Exxon. The biggest percentage moves tend to come from stocks that you've never heard of.
Usually, yeah, the best picks percentage-wise tend to be small, lesser-known stocks, but the reason is just very simple. I mean, you're not going to get these kind of returns from an Amazon or an Apple or a Google. They're too big. You're talking about, what is Apple, an $815 billion company today? It's not going to double next month. And it's not going to triple by the end of the year.
Even if Amazon goes from 1,000 to 2,000, which a lot of people think it's going to, I mean,
that's a 100% move.
Right.
It's nice, but it's nothing astrological.
Yeah.
Yeah, so that's why these smaller companies are just smaller in size, get a lot more room to grow, tend to post some of the bigger numbers. I'll give you an example. A few months ago, I noticed fresh insider buying in Pulse Biosciences. 5 days later, 5 days of the insider buying, the company announced this long-awaited FDA submission. The stock jumped immediately, giving investors the chance to triple their money in about 6 weeks. That won't happen with Amazon. Then there was Every Holdings. Last May, the CEO made his largest share purchase ever. Caught my attention. The next day, he doubled it. So it was obvious that he knew something.
No.
And you could have easily followed this trade and been sitting on a 479% gain.
Cheaters.
Well, take a look at Resolute Energy. In December of 2015, insiders went crazy for this stock. The president, the CEO, CFO, directors, everybody was getting in. 12 insider buys in 2 weeks. Now, at the time, this was a little $60 million micro-cap stock. No one was talking about it. A few months after insiders got in, shares went for a 1,036% run. So everybody started paying attention then, but the move had already happened. The only way you would have known to buy Resolute early was by following insiders.
Resolute's actually a stock that I follow, but you're right. I didn't hear about it and see it on the technicals until it was already trending higher. It's crazy to think that you could have bought this stock for $4 using your strategy.
Oh, without a doubt. Look, I've got to show you one more. This is Lakeland Financial. Now, Lakeland is a regional bank concentrated in northern and central Indiana, and the CFO is a woman named Lisa O'Neill. She made 7 trades between 2014 and 2016. But take a look at this. Those were her trades.
They ought to call it Lisa Financial. They ought to call it.
I mean, she bought every low perfectly. And short of, selling your soul to trading gods, I don't know how it's even possible. But here's the even more incredible thing. She already owns piles of stock. Lisa gets half of her salary in stock. So last year she received $215,000 of base salary, a decent little salary, but and another $208,000 in stock. Yet she still went out and regularly bought more. But you can see why. She knows when her stock is cheap and about to go up, just like the rest of the insiders we've been looking at. And as you mentioned earlier, it's hard to believe it's even legal.
All right, I got another question for you.
Hit me.
This is a lot of people to track.
Okay.
There's something like 6,000 publicly traded companies on all the major exchanges. Each one of them has multiple executives and directors. How in the heck do you know what to look for?
That's a good question. There are 3 primary signals for profitable insider trading. 3 things you want to look for. The first is perfect track record insider. So just like Lisa, our CFO at Lakeland Financial, who we looked at earlier.
Lisa.
Yeah, I mean, if they have, like her, a history of consistently buying the lows right before big moves higher, I'm going to pay attention when they trade.
So here's the big takeaway. There's no way Lisa could compete with me on other stocks, right? I would outtrade her. In theory.
I would assume.
I would assume, unless she's just that good, right?
Yeah.
But I bet you I can't outtrade her on her stock because she's got the inside information, right?
It's like if you specialize in one stock, you're going to know better than anybody else.
Well, you still, if I specialized in Amazon, I would probably have I would have a high percentage number of losers, but my gains would overtake my losers.
But you still wouldn't trade it better than Bezos would.
It wouldn't,
because he knows he knows the company numbers.
I wouldn't have a perfect track record like some of these CEOs. No,
that's exactly it.
All right, so that makes sense. What else?
So the second signal is cluster buying. Now, cluster buying is when several insiders are buying.
I just like that word,
cluster buying.
Cluster buying.
That was a sexy term. I made up with it, so I'll take credit. Well, cluster buying, besides being a cool name, is when several insiders are buying at the same time. So we looked at a couple earlier. I'll give you another example. In August, several top insiders at Southwest Airlines bought large chunks of stock. In a 36-hour period, the executive vice president, chief operations officer, president, CEO, and a director all made 6-figure buys. And
so are these your forms you're talking about?
That's it, yeah. So this is the actual form that these insiders have to file with the Securities and Exchange Commission. It's got their name, their position, right, how many shares they bought. It specifies whether they bought it direct in their account. Or, I mean, you'll see some that trust for son, trust for daughter, right, that kind of thing.
Do you go through these manually or electronically?
I got to do it all electronically. I got a system that does it. Okay. It'd be, you'd kill yourself.
So there's 4,000 trades a day like this?
Ballpark, yeah.
Woo. Woo. Right,
so, well, when it comes to Southwest, with this example, we got these big trades. On top of that, these were the first insider purchases by anyone in more than a year. So the result was, surprise, they happened to buy, coincidentally,
oddly enough,
within 20 cents of the low. Yeah. The stock nearly doubled under 12 months. So that's cluster buying.
All right. So the first thing you're looking for is consistent buy. They're consistently buying the lows and before the stock goes up. That's number one. And
right,
and they're right almost every single time.
Yeah,
that's your 272. When you were doing all your research, you found the goose that laid the golden egg. Right. 272 people that are just really, really good at it.
Right.
The second thing is this term that you have coined called cluster buying, when you see a lot of folks all buying at the same time. What's the third filter criteria you're using?
So the third kind of secret signal is the first-time buyer. So there are some insiders who buy company shares on the open market several times a year. But the guy who has never bought shares before, but is now, sends a strong signal. I'm not talking about someone who's new at the company. This would be an insider who has worked there for a while and only now decided to jump in. What does that insider know that is different from the prior year. Why are they buying now? Take Stephen Forsythe. He was the CFO at Chemtura, but had never made a purchase. Then Stephen made a huge buy. He bought $432,500 worth of stock in his company completely out of nowhere. And Hubert, wouldn't you know it, stock gained 406%. Now look, it's possible this was luck.
Of course.
It's possible it could have been a coincidence. Coincidentally, he happened to go on to make 3 more trades after that, made money on every one for a total profit of $3.5 million. And you could have made 7 times your money just by riding his coattails. That's the power when you see a first-time buyer. So there are other things I look for, but these are the 3 best signals. Perfect track record insiders, cluster buying, first-time buyers. If you follow those trades, you can make a lot of money.
It definitely looks like it. I want to ask you about this $100,000 guarantee you're making in a minute. But before we get to that, tell everyone what kinds of things that these people know that regular investors don't. Are you just talking about earnings reports or what?
So earnings is the first thing that most people think of, but it's really just the tip of the iceberg. If you think about it, they know things like if sales are heading up, if they plan to launch a new product or service, if they're gaining major new customers, new executive hires, if any legal action is about to be resolved, government approval on a drug or permit or legislation that's going to happen, if they're about to merge or acquire a new company, and other things you can't even imagine. And that's really the only difficult part. You know they are buying, but you often don't know why until the news hits the headlines weeks later.
That's got to be a great feeling, because when everyone else is chasing the stock that's just taken off, you already own it. You bought it a few weeks ago ahead of everybody else when you saw the insiders buying. So you're taking profits while everyone else is scratching their head trying to figure out what just happened.
Yeah, it's the only way to beat the market. You have to be first. You have to get in early before the news comes out. And who knows the news before it comes out? Yeah, the people who work there, the insiders. So it just makes sense to follow them for tips.
Now, you run a service called the Insider Report where you track these trades every day. Tell us a little bit about how you do that and what it takes to do the research. Could someone do this themselves?
It is possible to do on your own, yes, but you'll kill yourself trying. As we mentioned earlier, about 4,000 insider transactions take place a day. So you need a real-time system designed to cull through the data and find the most profitable insider buying opportunities. You also need an institutional Bloomberg data feature system. Otherwise, you'd have to manually go through those Form 4s we looked at a second ago, one at a time, which is just not possible. Now, with my system, I have access to these trades the moment they hit the wire, and once I've filtered the data, then I can dig deeper and manually find the best signals like cluster buys and first-time purchases.
That sounds like a ton of work. Most folks would probably be better off letting you do the heavy lifting and then giving them the best 3 or 4 best signals every month. Clearly the strategy works, but let's talk about today. What stocks have you found recently?
Well, there are the 3 I'll be recommending to new members tonight. I'm going to talk about those in just a second, but let me show you a recent winner first. The company is Brinks. They're the ones in armored trucks picking up cash in front of your bank. Now, as you'll see in the 5-year chart in front of you, for 5 years, the stock went nowhere. It was a total dud. And for 5 years, not one insider bought a single share. But suddenly, the CEO bet big. He used $2.5 million of his personal money to buy Brinks stock.
$2.5 million would not be my first trade.
That's
on anything.
That's a pretty big first step. That's a pretty big toe in the water, I feel like.
Did anybody in here start their trading career with a $2.5 million trade? Anybody? I know I don't. I definitely didn't.
Well, on top of this trade being huge, as we mentioned, it was also his first. Now, 6 days later, so we go 5 years of no trades. After the CEO gets big, 6 days later, a company director named George Stokert bought in. It was his first insider buy as well, and he invested more than 4 times his annual salary. Yeah, I mean, think about that for a minute. Whatever it is you make, take your annual income, multiply it by 4, and imagine putting that much into a single stock. I mean, that's confidence. Then the CFO joined in, the chief financial officer. He invested $500,000 on his first insider buy. So we had three clear signals that Brinks was about to take off. One, these were high conviction trades. $2.5 million from the CEO, $500,000 from the CFO, and a director betting 4 times his annual salary. Two, it was a cluster buy. After 5 years without a single insider buy, 3 different executives took large positions within days of each other. And 3, they're first-time buyers. Each of these insiders is buying stock for the first time. So what did they know that they just couldn't miss out on? Now, another big coincidence here. A few weeks later, the company announced earnings. The company swung from a loss of $15 million to an operating profit of $22 million. So you got to ask yourself, which is more likely? That all these insiders, after 5 years of sitting on their hands, just happened to luck out and buy stock precisely when the company turned around. That is possible. Or maybe, just maybe, they knew the numbers and decided to cash in on a blockbuster earnings report. Because as you said, that is a huge swing in profit that the market didn't know about. And the director who wagered 4 times the annual salary, he doubled his money in less than 9 months.
Your research speaks for itself. I don't see how anyone could argue with it, but has anyone else studied this approach?
Actually, yes. There's been academic research proving that even blindly following insider trading is extremely profitable. For example, a Wharton School of Business study concluded that investors can reap exceptional profits by imitating insiders. And a Harvard Business School study, not a bad little institution there, found that when a top insider buys his or her company's stock, it rises by an average of 31% in the next 6 months. When one of them sells, it falls by an average of 26%. They also determined that following opportunistic insider trades would have returned an additional 21.6% annualized rate of return over the market since the year 2000.
All right, so hold on just a second here. So the term opportunistic insider trades, so there's so many trades. You're talking about the ones that have a decent track record, and you're filtering out all the just little buys that don't mean anything, right?
Right.
So you have to have a filter criteria. It's not just all insider.
No,
buys, right?
yeah, I don't want to mislead like it's a blanket approach. I mean, the researchers over at Harvard tend to be fairly intelligent people.
Yeah.
They're doing things similar to what we are when they're doing their research,
Right.
and that they're filtering out routine purchases. They're
Right.
filtering out stock option exercises, and they're looking for what I told you, cluster buys, first-time buyers,
Sure.
CEOs putting in $2 million out of nowhere, things that are seen as opportunistic for no reason.
All right, so using a filter criteria of opportunistic insiders, that's an extra 21% a year just by following insiders.
That's right, yeah. It's an additional 21% on top of the market's return. Let me show you what that looks like. Since 2000, $100,000 in an index fund would have grown to $209,000. Not bad. But you could have grown it to $5.3 million just from following the right insiders. No options, no leverage, just buying the right stocks at the right time. It's common sense. These insiders have inside information. They know more than anyone else in the market. And following them can hand you huge profits.
All right, I have a question here for you, and I bet a lot of our viewers are asking the same question. Will this work in both up or down markets?
So the short answer is yes. Almost every year there are 50 to 100 opportunities to pick up triple-digit gains following insiders. Whether the market goes up 11% like it did last year or falls 36% like it did in 2008, these opportunities are out there. The top insiders are always making money. Following them is like getting a completely legal inside tip from the smartest 1% of investors in the market.
Okay, so let's get to what viewers have been waiting for. They've seen your research, and why following insiders is one of the easiest and most predictable ways to find breakout stocks. They've seen the huge profit potentials, and they've even learned your 3 magic criteria. Now let's look forward to tomorrow. Okay. Tell us about the research on your 3 picks that your members have access, your new members have access to right now. Because I know you're doing this wild guarantee of new members get a chance to gain $100,000 in profits over the next 12 months. So let's jump right in. Give us the research that you're looking at right now.
Okay, so like you said, there's 3 picks I'm looking at now. The first company is a leading provider of fuel cards. So if you've ever had a gas card from stations like Shell or Texaco, it's probably issued by this company. Their business model is simple. Instead of competing in the highly competitive gas station and convenience store market, they offer a value-add service for the leading stations. They have partnerships with Shell, Speedway, BP, Arco, Chevron, and half a dozen others. They recently announced a new deal with Uber, but the real story is the insider buying. After more than 3 years without a single buy, 10 different insiders picked up shares. In just 8 days, 8 days, these 10 insiders bet more than $3 million of their own money the stock would soon go higher. 2 were buying shares for the first time, one of the key things I look for. Others are making their largest trades ever. The next earnings report will be released in August, so we could see unexpected good news any day now. The stock also just breached its 1,500-day moving averages, signaling a sustained move higher. I expect shares of this stock to soon take out last year's high, and the result will be a move of at least $26 a share and a potential option gain of 326%.
All right, that's the research on your first pick that members are going to get. What's the second one?
So the next company is a producer of semiconductors and computer electronics components. They design, make, and supply components for some of the top names in the industry. And although the company has been around since 1921, insiders rarely buy the stock until recently. In his first insider buy, the company's CFO just invested $250,000. And a company director tripled his position, investing a record $1.5 million of his personal wealth. Now, fundamentally, the stock is undoubtedly cheap. It trades below book value. It has a PE ratio of just 9, which for the non-fundamentalist.
What is a PE?
Price to earnings ratio.
PE, so like Tesla, right?
Yes,
Tesla,
let's not talk Tesla.
Snapchat,
Twitter. They have no earnings. They have no earnings.
I did a video today talking about that, like when you and I were talking. It would be, I think they should make it like, if a company is not profitable, they shouldn't be able to be on the stock exchange. You know what I'm saying?
That would filter out some of the.
It would filter out some of the more
nonsense.
highly speculative.
Yeah, because for every company like Amazon that went a long time without making earnings,
Right.
is now a powerhouse. For every one of them, you've got these Snapchats run by these arrogant 26-year-olds rejecting $3 billion buyout offers.
Here's how you know Snapchat.
And they spend like, they lose like $500 million a year or something.
It's something like that. But if you're 19 or if you're less than 30 and somebody offers you $3 billion with a B,
No, I'm good.
you say no. Yeah, you don't say that. What you say is that the best you can do? And then if they don't counter offer, you're like, I'll take that. That's how you know that company is destined to go to $5.
I think once I regained consciousness, I would just shake his hand and take the $3 billion.
Yeah.
But so on this company, on the second stock, it's really cheap, below book, low PE ratio. They also pay a safe dividend. They're sitting on more than $1 billion in cash. And you look at the stock, insiders are aggressively buying the dip. Now the stock has just begun to push higher. I think we could easily see a quick jump of 35 to 40% and pocket up to 390% on a very simple option plan.
So both of those have really strong research for your criteria. What's your third research pick?
So my last pick is a $3 billion real estate investment trust. It's a REIT. Now, REITs have been suffering lately. A lot of people don't want to own them because they're in an environment of rising interest rates and a trend towards e-commerce. But this company's different, and the insiders know it. So as shopping malls lose tenants, this REIT has begun converting retail space for commercial and service use. So instead of leasing to JCPenney and Dillard and Gap and these companies that are closing down stores in record numbers, they're filling the space with gyms and nail salons and corporate offices, things that can't be replaced by shoppers going to Amazon. Now, this is the company's revenue for the last 5 years. It's up more than 50%. But the stock has been brought down by other REITs who are doing far worse. It trades at less than half of last year's price, but insiders know it's worth a hell of a lot more. They're so confident, in fact, they're betting $18,173,000.
That's a big bet. You know what that reminds me of? That reminds me of your, what's his name, Earl?
Oh, Erland?
I'm calling him Earl. So just like when Earl, back in the financial crisis, decided, hey, man, this bank is worth more than that because we don't have all this other stuff on our balance sheet that a lot of the other big banks
Yeah,
have.
it's very similar to that example.
Same thing, like all REITs are not evil. They're not all bad.
Well, but think about it. Like in 2009, if you're a fund manager, you're dumping every bank stock in your portfolio.
Oh, sure.
You're not looking at them twice. You're not running the numbers.
Yeah,
You're dumping
You're
them.
dumping them all.
Now, one of those happened to be Five Star Bank,
Yeah.
which wasn't exposed to the same risk that Wells and Credit Suisse
Right.
were. So it got in cheap. Same thing with this stock, right? Everyone is dumping REITs right now. A lot of them are trash, but some of them, but not all of them.
Right,
This happens to be a good one. So I'll show you this chart as well. This shows the insider buying and selling, like I showed you before. And so since March, on that 18 million, we've seen the president, the CEO, the CFO, the treasurer, a slew of corporate insiders. They've been buying this stock up hand over fist. It's one of the largest buying sprees the company's ever seen. But the dust will soon settle. This stock will return to its true value. And those who followed these insiders stand to make a lot of money when that happens. My short-term target is 78% above current prices. My medium-term target is closer to 136%. I'm also looking at some call options that right now are trading for about 50 cents. And if my medium-term price target is hit in the next 6 months, investors could make up to 21 times their money. So $1,000 return into 21,000, 5,000 into 105,000. Now, obviously, Hubert, as you know, I cannot guarantee these returns.
What?
It's true. No guarantee.
Here's
on the
my
returns.
blanket disclaimer on any trading information, product, service, indicator, anything. There are no guarantees in life. There damn sure are no guarantees in trading.
Right, but here's the thing. Look, we know that no trade is without risk.
Sure.
But even if this does half of what I expect, you could multiply your money many times over.
All right, so we got one trade with a 326 profit potential. The second trade with around 390% potential. And a third, if you play options, you could get a return as high as 2,100%. That's 2,000%. So how do people get in on this?
First, let me say, these three trades will move fast. The market doesn't yet know what the insiders know. But when investors find out, the stock, as we've seen again and again, will go up. This could come from a press release any moment or from an earnings call in just a few days. So now is the time to be decisive. I've just wrapped up a report on these three stocks, and new Insider Report subscribers can download it immediately. The report is called The Best Traders You've Never Heard of, How to Pocket $100,000 Following Insiders.
All right, so now I would like to invite our listeners to get the details on your three recommendations. You can get the report for free the moment you join, and Ross is doing a guarantee you the chance to earn $100,000 in profits in the next 12 months, which I want to cover here. Let's make this crystal clear here. Okay. All right. If you don't make, this is Ross's guarantee, if you don't make $100,000 following the Insider Report trades over the next 12 months, Ross's entire team will work for you for the second year absolutely free. Right. And you're only taking 20 new insiders on today's webinar. 20 new members on the Insider Report today. And these spots are reserved for the people that are watching right now. So once the 20 spots are taken, that's it.
That's right. And look, the reason I do this is very simple. We've been kind of releasing it. We just started offering the service a couple weeks ago. We've been launching out in just kind of some small chunks.
Yep.
Two reasons. One, I like to work very closely with subscribers. So anyone who's a member now who's sent in a technical question, what I do on this stock, what do you think about this? The response comes from me personally, directly. I even had a guy that I need you to talk to you on the phone. I called them up that night. Sure. That's how I like to work. I can't do that with 1,000.
I think it's really smart. That's how we do business. I'm actually investing in Ross's business. I believe in Ross so much and his service. I believe in him more than I believe in anything else. But that's how we do it. When we sell Bond Trading Bootcamp, Gold Trading Secrets, Ichimoku, we take a small number of people so that we can actually take care of the people. Because you want your users and your customers to have a really good user experience. I mean, I would love to sell 3,000 Bond Trading Bootcamps, but I can really only talk about 300
the first time we
at a
did
time.
50 of them. I was like, I don't know how much these people are going to need. I don't know how much they're going to email me. Yeah. And it wasn't that bad. It's like they realize it's very straightforward. It's very simple. They have very few questions for the most part. So, all right, bring another 50, another 50. So they get too many. We'll slow it down. But I prefer to keep the initial group small. That way we can make sure everyone gets the best possible service and has access.
Makes total sense to limit the number. That way you can take care of the ones that you have. So tell us what to expect in your Insider Report. How's it work?
So it works like this. When I find perfect setups, like the three trades I'm recommending now, so the examples I've shown you guys this evening, I blast out an email to my Insider Report subscribers recommending the stock as a buy. These email alerts are straightforward and easy to read. I'll include a write-up on the stock, why I'm recommending it, which insiders are buying, and where to place a stop. And when it's time to take our profits, I send out a sell recommendation. I also include an option play with each stock pick. So the moment we see the surprise news, whether it's a press release, earnings report, government approval, whatever, and the stock screams higher, I'll show you a way to make 5 or 10 times more than we'd make on our stock trade using options. This is also a big advantage for small account traders. With call options, you can start out with as little as $500 per trade, and with a few decent winners, quickly build up your capital.
Okay, how many recommendations will people see a month?
Each month, I send out about 3 to 4 stock recommendations. It generally is about 1 a week. Okay. Some months could see even more. It just depends on how many opportunities present themselves. I'm very picky about only recommending high conviction ideas with multiple buy signals. I'm only sending out the best of the best.
Well, whatever you're doing is working, because I know my team's been taking some testimonials, and here's a few that we've got over the past 2 weeks since the service started. So let's take a look here. Here's from James. James goes by Jim at, I don't know what his email address is. Great trade on, you've blacked it out so they can't see it. Yep. Yep. Made 50% on 5 contracts for a total of $2,230. Closed today. All this in 1 day. Here's one from Bruce. Looks like I dipped my toe on this one with a debit spread, and I'm up over 70%. Go to the next slide. And then here's one from Eric. Ross, I just wanted to say thank you for your research and wanted to share my gains. I closed out a position. The market was a bit shaky, but here are my gains. I booked $250 on an option, $450 on calls, bought the stock and option, $600, practically paid for my subscription. I love the focus and that you aren't and that there aren't too many picks, which can make it overwhelming. I do this full time, and it's a great help to me. Very glad I chose to subscribe. Next slide. I think this is funny. Ross. Is just your email?
So
Ross?
Just so you notice, I blurred out the names and email addresses to protect people's identity. I left the D, the first letter of his name, so you know
to prove it's not you.
I'm not writing my own testimonials.
That's funny. So Ross's last name is Givens, not Ross D. Ross, thank you for sharing your trading strategy. I've followed Hubert for a couple of years now, and I love his no BS trading style and easy to understand terminology. I purchased your program less than 2 weeks ago, and I've already made money using just $2,000. So that's pretty cool. Let's go to the next one. This is my favorite one right here, I think.
Because it says Dear Hubert Centers.
I like it. It's got my name. I'm using it, even though it's your testimonial. I'm using it. I purchased the Insider Report just a few weeks ago, and I have never traded options or stock. I took my first trade with blank, and I made over $1,000 on the stock and over $1,100 on options. Now, all of us in this webinar know that Stephen should not simultaneously buy the stock and the option. He should do one or the other, or buy one and hedge with the other. Right?
That's what I would do, but it worked out for him.
Worked out for Stephen. The second trade I did was on blank, and I made $650 on the stock and over $950 on the options. 2 picks, 2 winners. I've already paid for my subscription service for in the first 2 trades, and it only took 2 weeks. It's so nice to see a service that actually delivers what you advertise. Thank you so much for a great service. All right, so whatever you're doing is clearly working. And that was my favorite one right there. Now, look, we can't guarantee you're going to do the exact same experience as these guys. Past performance is not indicative of future returns, right? But he's doing something right. So,
yeah, well,
you're getting strong trades right out of the gate.
Yeah, we are. There's a couple right out of the gate, and look, it's there's nothing I love more than seeing people pay for subscription in the first 2 weeks, sure. Right? As you said, we can't guarantee that, but it does feel good to see this, and I'm happy that people are really getting a positive experience.
Now, I'm a big fan of pyramiding into winning positions. Walk us through what it would look like, a hypothetical example, if you rolled your winnings into winning trade after winning trade.
Okay, so yeah, this is something I worked up. Hubert and I were looking at the other day. We'll look at 3 examples I gave earlier and just assume that each one fell right after the other. Now, had you started with $5,000, okay, you could have grown that to $16,500 in your first 11 weeks.
Which is a good move.
Yeah, nice little trade in 5-star bank. Options on Southwest Airlines would have grown that to 151,965.
You now sell half. You do not roll it all into it, but in this example, we're rolling it.
But assuming you didn't, and
Right.
you rolled those dice again,
Right.
you could have put your profits into Brink's calls, would have added another 775%, bringing your total to $1.3 million,
Now,
265 times.
You definitely take half off, put it in an index fund, and leave it the heck alone, and trade with some of the extra.
Yeah, I mean,
This
look,
is hypothetical. Walk through how we would really do this.
What would really happen? You get this first bang out trade. You're like, yes, this thing's awesome. I tripled my money. Even if you rolled it all, the next one may be up 10, 15%, or maybe you lose 10%. You have a couple of that are just little ones. Yep. Another decent sized winner. You take another big chunk off.
Yep.
Right, you bring it down. You have a couple of decent trades. So it would have worked a little differently. Don't take this the wrong way. Neither of us are saying start with $5,000 and we'll show you how to turn into $1.3 million. That's an absolute best case scenario. Anytime you put money in the market, you're taking on risk. But even a fraction of that would still be life-changing. The bigger point here is that following Wall Street's most successful insiders and buying undervalued and pre-breakout stocks is the easiest and simplest way to ensure you win often and big. The academic research proves it, my research proves it, and certainly the track records of these insiders prove it.
All right, you've seen his research, you've seen the incredible track record of the insiders his service follows, and now you have a new opportunity to join them. Here's the deal. Ross has 20 spots available on tonight's webinar. You will get instant access to the new report with the 3 picks. You will get 12 months of stock alerts, easy to read buy and sell recommendations. He's going to give you 3 to 4 trades per month. He's going to email you out a weekly progress report. Now, unfortunately, it is not free. With a research staff, data cost, and years of proprietary knowledge and software, this is an expensive service to run. Look, I'm holding just a small sample of the research, and I can tell you it's a ton of work. The strategy is proven, and they have done all the hard work for you. If you were forced to access Ross through a traditional hedge fund, it would cost you well over $100,000. Most hedge funds, you're going to have to invest at least $1 million, okay? And then they're going to take a 1 to 2% management fee. And then 20% of your profit, 20% of your profit. Some do 25%. Now, here's the best thing about hedge funds. If you lose money, they still get to keep 2%. It's a great deal for the hedge funds, all right? But you can get access to the same research yourself by following Ross's simple insider alerts. You won't pay $100,000. You won't pay $50,000, $20,000, or even $10,000 because I've twisted Ross's arm to give you a discount for Bigelow's email subscribers. All right? For a short time, you can subscribe for half off. So instead of buying the full retail price of $4,000, you can get the insider report for just $19.95 a year. Now, it's even better because you've made the time to attend this webinar. We're offering you an additional $500 off. That means you can lock in a year of service for only $14.95. But this price is only good today on this webinar. You will not be able to get the $500 discount if you wait until tomorrow. So you need to act now. There are only 20 spots available on a first-come, first basis. So that's it. There's no waiting. These 3 opportunities are all set up, ready for you to go. The spots are limited. When you click the link below, when we post it up here, you'll be able to see if there's any spots left. So if there are, you need to grab one. Now, there's 147 people in here in the webinar, so that means only a small percentage of you will be able to get in. So you got to make a choice. Do you want to be an insider or do you want to remain on the outside? As soon as you order, you will receive a username and password to a secure site where you can access Ross's research and immediately download the report, The Best Traders You've Never Heard of, How to Pocket $100,000 Following Insiders. So all you have to do is go to the link, hubertcenters.com/big, like Bigelow, hubertcenters.com/big. You can also call the telephone number, area code 859-963-3445. So you can call that. Those are the 2 ways that you can do your order on tonight's live webinar. So, Ross, let's open up this bad boy for questions. Now, we've avoided the questions because if we got sidetracked, it would just mess our whole flow up. So we're going to start answering questions here. I think you can grab this and drag it up, and then we can see the questions. Like, I think you can grab it right here. That little, no. Oh, you already got it? All right, there you go. All right, so let me see here. Let's see here. Cheryl, what we do is we sell them in very small lots so we can control the user experience. That's why we do that. Let's walk through your $100,000 guarantee.
Okay. So,
how does it work, and what are you giving them?
So the $100,000 guarantee works like this. So we had to base the number on something, right? I mean, I'm not going to say start with $50 and you'll make $100,000. That's impossible. So the $100,000 guarantee is based on the assumption of $5,000 put into each stock trade, not the option.
All right.
Now, when I say that, I don't mean that you personally have to put $5,000 into each trade in order to get the guarantee. All it means is we're tracking this stuff down to the penny, and if a $5,000 investment into each stock recommendation at the end of the year did not result in a net $100,000 profit, wins and losses,
your ass is working for free.
That means Ross is going to work for free, and the rest of my team. That's right. So that's how that works. And Cheryl, to answer your question, said 50, and then Bigelow. Yeah. So Cheryl, we'd already agreed to do this presentation for Steve Bigelow's group, so we wanted to be sure we kept stand everybody out when we sold 50 earlier.
All right. When it moves above the cloud, 104B. Where to get website to go to find the insider advice. That would be the insider report. Do you have to be a technical trader to? Let me show you how I'm using this service, guys. You guys know I'm a huge Ichimoku fan. So what I'm doing is I'm using Ross's service, and then I'm overlaying Ichimoku on top of it. And then if I get them both to line up, I'm good to go. And you can use, now, is this a day trading service?
It is 100% not a day trading service. So Hubert, I know you're a good day and swing trader. Personally, it's not my wheelhouse, not what I'm focusing on. This tends to be a very swing/long-term type investment process, right? So it's not something where I'm going to say, hey, buy this stock on Monday and then get out by Tuesday night. Generally, we're looking at 3, 6, 9, even 12-month holding periods. Because look, a lot of the examples I showed you tonight, some of them were, hey, it popped in a week or he's up in 6 weeks.
Sure.
Some of them were 12, 18-month holding periods, right? I mean, if you're trying to make 1,000% return, it usually doesn't happen in a week, right?
So they have to hold it for at least 6 months, but we could hold it for 6 days, 6 weeks.
Yeah,
or
so
we
got the flexibility,
right?
If it pops early, we'll get out. I mean, look, we've been running this thing for 2 weeks. We've already taken 2 option trades for 100% gains. We booked those, pulled back a little bit, so we're going to keep doing that.
Right.
But yeah, it just depends on how you want to do it. I mean, if you're trading the option, obviously they're going to move a little quicker.
Gotcha.
If you want to do long term, the stock's a good way to go.
The cool thing about this, Ichimoku and candlesticks, because I know everybody in here is a big candlestick fan because you're a Bigelow followers, you can have Ross's alerts sent to you, and then you can wait for your candlestick combination and go, okay, it's not doing anything. I'm going to wait. Oh, now I got a candlestick.
Yeah, and a lot of people are doing similar stuff to that.
Yeah. All right.
So I saw a good question. Justin asked, how do you find the insider trades? And what I know the data is very old and useless by the time it gets. That's actually not true, Justin. It may have been before. Insiders have, just so you guys know, they have 48 hours from the second that trade was placed to report to the SEC. Now, most of them aren't going to wait to the last minute. If they place the trade, they call their lawyers, hey, I'm buying the stock.
Right.
It's generally filed same day or day after, right?
Gotcha.
Those things are immediately available electronically. You can go through them manually. I see them on my system the minute they hit the wire, so I can always track who's buying what, how many shares, and at what price. And so, I'm getting flagged if I see, hey, the CEO bought $1 million worth of stock, or 10 guys are getting in, that kind of thing.
I got you. So do you need to know how to use stochastic, MACD, RSI, none of that
Look,
stuff?
I made this as simple as humanly possible. I'm even thinking about letting my 9-year-old nephew trade it just so that I can show anyone can do it. But look, it's going to be very straightforward. The alerts come in. It tells you, about the stock, why I'm buying it, why I'm recommending it, what price we're buying up to. It gives you the option trade if you want to do that. It tells you where we're placing the stop loss order.
Gotcha.
And then you don't even have to track this stuff. So if we take profits, I'll email you and let you know. If we adjust our stop, I'll email you and let you know. If it's no longer buy and hold, email and let you know. So you got everything there. You can log in the members area at any time, see the full portfolios, what we're in, where our stops are, where we're looking for. You can see all the archived issues, every trade we've placed. And I even do, as you mentioned, the weekly summary emails. End of each week, I send you an email that says, hey, here's any stocks we bought this week. Here's anything we sold. Here's any profits. Here's any stops we moved. So if you go on vacation for a week, you come back, you weren't checking your email, just Let me see what I missed. And like we said, 9 times out of 10, these are still viable trades, right? It's not something you got to get in that second. You got plenty of time usually.
I got you. All right. So do you, as far as skill level, what skill level do you have to have? Beginner, intermediate, advanced? Do you need to know how to trade stocks and or options?
I don't think so. I mean, we saw a couple of testimonials from someone who would never trade a stock or an option. And you know, it's up to you what you're comfortable with, but I will say that this is as straightforward as it gets. It's going to be, here's a ticker symbol. You enter how many shares you want to buy and press buy. Even the option, I give you the full symbol. So Jason asks, FinViz allows insider filters. How is your system any different? So Jason, good question. There are places you can find bunch group basically data dumps, right? And they'll tell you, oh, all these insiders are buying and buying and buying. But I guarantee you cannot go in there unless you spend hours and hours a day like I do and know, oh, well, that insider quote unquote buy was actually a spinoff and they just handed them a bunch of shares, or that was actually an option exercise, or oh wait, they all bought at the exact same price. Clearly, this was a stock award to them, right? So you have to be able to have a system able to track all this stuff. Otherwise, you're going to go to FinViz and you're going to end up with 50 recommendations a day. I promise you 48 of them are garbage. So,
yeah, Cheryl, I can give you an accurate count out after the webinar on what that is based upon this webinar, but Ross will have a problem at some point where you will have to limit this service to the amount of people because you will start moving.
That's something we're monitoring. We're monitoring very closely.
Yeah.
I mean, very few of these stocks are really, really small. I'm not gonna recommend a little 10-cent penny stock or something we could move. But we are monitoring both the stock and the option volumes. I want to watch the open interest, watch the volume, be sure we're not moving anything. If I see any of that, we'll obviously shut the thing totally down. But yeah, Cheryl, as you mentioned, we're doing it. Like I said, generally in chunks of 50. We had already agreed to the webinar for Bigelow. We sold 50 today, as you mentioned. So well, let's I don't want to do another 50, but we're
doing them smaller and smaller chunks. Yeah, we'll eventually just
do a couple more. I don't want to leave everybody out. Yeah. So I got a good question. Philippe asked you to look at significant insider selling. It's actually a good question.
It doesn't matter as much, right?
It doesn't matter as much, right? So what you'll see is, Philippe, as I mentioned, a lot of these insiders receive big chunks of stock and stock options as part of their compensation package. And so if they want to add a swimming pool or buy a vacation house or send a kid to college, they got to sell some stock to do it. It doesn't mean anything negative about the company. Right. But they only buy for one reason, and that's because they think the stock's going up.
Exactly. So Jared's waving at me. He's right over my shoulder here. It says there was only 7 left, so you got 7 left. What we'll do is the same thing as we did in the earlier webinar from my people. Is I'll show you guys once all the seats are taken, we'll lock it out so nobody else can buy at that special discounted price. Can you have 50? Doesn't add up. Sounds too good to be true. Cheryl, I'm not sure what you're asking. If you'd be a little bit more clear with you, I'll get you an answer to what you're asking.
Well, Ed's got a question. He said, I've seen Form 4s, and Form 4 is the form where they actually file, report their trade, where officers have acquired stock, but the form showed no cost. How do you view those? So, Ed, it's a good question. That's one of the ones that anyone following, FinViz or whatever filter, is going to just give you all these buys that aren't real, because what those are at no cost is stock awards to company executives. So if they spin off a division and that becomes its own stock, they'll give shares to the executives that are in charge of it. If there are just regular equity awards going out, they'll get those, and it's going to show up on the system as an insider buy when really it's not, because they didn't take in their own money to do it. They just got handed shares. Right. So it's kind of a false flag.
All right. Got an audio question there. Jim's got that one. Jared's hand signaling to me there are 3 spots available. 3 spots available left. Can you? I forgot all those. We just want to make sure we're scrolling back and answering all your questions about this. Cover. That one.
Yeah, so the 2 rule, the Form 4 is the actual form the SEC filing that goes in. Those are the ones that are converted to electronic data, which I run through a real-time system, and I can filter for trades that meet a handful of criteria. And then once I have those, I do still have to manually go through and find the best opportunity. So it is a lot of work to do it. Like I said, it's possible you can do it yourself if you really want to spend the time and do it. It's just most people don't. Most people would rather not spend 30 hours a week finding the trades.
What?
They'd rather just say, look, here's $1,500,
Yeah.
do it for me. And we've seen some people who made the money back in the first couple of weeks.
Exactly. All right, guys, we are officially closing her down here. All 20 spots have been taken. The phone's ringing, so you might get one more person to slide in here, but it won't be more than 21 or 22. So I'm going to have Jared lock her down here and show you the lockdown page. So if I go to this, make sure that we're keeping our words to you. Go to hubertcenters.com/insider, and then if you hit return, refresh, it'll say the insider report is sold out. All spots are currently filled. So on this webinar, 20 spots available that we made available are taken. So we want to thank you for purchasing. Do you guys have any other questions before we take off? We're gonna go. I'm gonna go have a bourbon. It's been a long day, so I'm gonna have a Woodford Double Oak bourbon on the rocks. I know Ross will probably have one too. Thanks for showing up for the webinar. Steve, thanks for having us. Appreciate it. How do we purchase this? Cheryl, you'd have to call the office. You can't do it now. We just locked her down. What's the bourbon brand? Oh, the bourbon brand is Woodford Reserve Double Oak. Don't get the Distiller Select. It's not as good. And that bourbon is distilled about 8 miles from my house. It's called Woodford Reserve, and you want the Double Oak. The Double Oak is a lot smoother.
Very smooth.
Very, very smooth. Just put a big, I have these little ice spheres. Instead of cubes, they're spheres. Spheres, you can get them at Amazon. I know Ross has got a couple too, and you just put that in there, and you usually do either a 2-finger or a 3-finger pour, and it is delicious stuff. So Cheryl, the only way you could possibly attempt to order would be call the office before we get out of here. Great bourbon, Woodford Reserve Double Oak, love bourbon. Yeah, it's some good stuff. I've tried Scotch before. I'm not really a Scotch guy. Scotch has got a little bit more of a bite, where bourbon's a little bit more of a sweet aftertaste. So I'm more of a bourbon guy. Plus, I'm in
Kentucky. You have to be. If you're not a bourbon guy, you get hung around.
I kind of got to be a bourbon guy, or people are going to give me a lot of shit about it. So yeah. All right. Good luck. Hope it helps. We'll see you guys on the next one, and wish you the best of luck trading tomorrow.
Thank you, guys. Very good stuff. Yep. And as Hubert was saying, you can use their service, and then you can get much better clarity. He uses the cloud. Use the candlestick signals to tell you when the timing is the best. With that, everybody, have a good evening. Hubert, you guys, thank you for a good presentation. We'll see you in the chat rooms.